हेलो गुड मॉर्निंग वंस अगेन एवरीबॉडी एंड आज हमारे साथ है मिस्टर अंकित जैन। अंकित जैन सर बेसिकली कोर फंड मैनेजर है मिराई के सबसे बड़े फंड के साथ दैट इज इमर्जिंग बिजनेस। और सर फंड मैनेजर है मिराई एसेट ग्रेट कंज्यूमर फंड। एट द सेम टाइम मिराई एसेट के मिड कैप को देखते हैं। Is having the rich experience of so long with the Mirae Asset, and not only Mirae Asset, but he's into the industry since now for almost not less than 10 plus years of experience is carrying. I'm sure that he's building the flagship brands of Mirae, wherein everybody is so much of fan of Mirae now. So आज सर के साथ बात करेंगे बहुत सारे different टॉपिक के ऊपर। सर वेलकम टू द शो दैट इज मीट योर फंड मैनेजर विद इंपीरियल मनी।
Yeah, thank you for giving me this opportunity. More than happy to take this session.
Thank you. सर आते हैं डायरेक्टली। बाजार में बहुत सारी अनसर्टिनिटी है। ग्लोबली देखा जाए तो बहुत सारे इश्यूज है, ह्यूज नेगेटिविटी फैली हुई है। हर एक डेटा देखा जाए ग्लोबली तो कोई बहुत अच्छा क्लैरिटी नहीं देता है। किसी को भी बहुत ज्यादा व्यूज पता, मतलब किसी से भी बात करो तो समझ में नहीं आता एग्जैक्टली वॉर कहाँ जाने वाला है। वेस्ट पूरा यूक्रेन को मजबूत तरीके से सपोर्ट कर रहा है, अभी तो बहुत सारा और भी पैसा भी दे दिया, वेपन भी दे दिए। तो कहाँ वॉर रुकेगा, कहाँ ग्लोबल कमोडिटी के प्राइसेस जाएंगे, नोबडी इज अंडरस्टैंडिंग एक्चुअली। एंड अक्रॉस द ग्लोब सर इन्फ्लेशन इज नॉट एक्चुअली कहीं भी रुकने का नाम नहीं ले रहा है। सर इस पूरे सिनेरियो को आप कैसे देखते हैं? बिकॉज आई एम श्योर दैट आपके फंड हाउस का एक कुछ तो कॉल होगा, तो हाउ एक्चुअली मिराई इज लुकिंग एट ऑल दिस पॉइंट्स?
Yeah, sure. No, this is pretty, relevant. Sort of a point to really start with, and more so in current time which are so volatile. I think COVID was not enough that this particular thing started, and then again, which has further sort of make things upside down. So really, I think if you so I will try to cover most of the points which you have asked across through this question. So let me start one with this, let's say, war itself and importance of Russia in overall scheme of thing, Russia and Ukraine, because that will give some bit of a flavor that where exactly we are heading as far as this war is concerned. So really, importance of Russia from global perspective and to assess the impact of current crisis on global as well as Indian economy. So Russia accounts for, let's say, 12% of global oil production. So almost 12 million barrels per day, out of which 7 million is export, 4.5 million is in the crude form, and let's say 2.5-3 million barrel in terms of finished petrochem products, and almost around, and even importantly, 17-18% of natural gas production, world's natural gas production. So ongoing crisis obviously has dislocated supply, which has resulted into sharp energy crisis, or let's say prices worldwide we have seen. And as you rightly pointed out, things as stands today doesn't look like, or things might continue to prolong. Because all of these things, even if, let's say, war settles down anytime soon and all, it is going to followed by sanctions and all those sort of a thing, which will further impact overall scenario. So first, this thing has already started impacting global growth outlook, given very sharp rise in energy bills. So which is really impacting, you might have seen right through that, particularly growth outlook in Europe, US and all is sort of getting impacted. Just to give you certain example, and which is also from, let's say, historical data points, that when energy prices start touching more than 5% of GDP, then it really starts taking a big toll onto the overall GDP growth and might points towards some sort of a recession as well. So which is now point being in case at this point of a time in, let's say, some of the European countries as such. But let me come to the India piece of it, and let's say impact on of all this aspect to India. So really, assuming current crude oil prices sustaining, let's say, at around $120 per barrel, definitely assumptions has undergone a change. Prior to, let's say, this war and all, we might be working with an assumption of $90 per barrel. So clearly $30 jump in has been there in the base case, and at least we believe that crude might not come down significantly in a hurry. Though we have been seeing that because of some bit of a demand destructions and all that, most of the other commodity prices are are getting sort of normalized. I mean, we have seen most of the commodity prices has corrected 25-30% from the peak, but not crude. And it doesn't look like so also. So even let's say with an assumption of $120 per barrel, energy import bill for India could rise by around $50 billion plus minus $5 billion here and there, which is like around 1.5% of GDP. So this will obviously have repercussion on overall India GDP growth rate as well. We have already seen fiscal year 23 real GDP forecast getting slashed by around 80 to 100 bips here and there. Also, to give you some other, let's say, data point from other macro indicator standpoint, you look into every $10 per barrel increase to impact GDP growth as well as current account deficit somewhere in the range of 35 to 40 odd pips. Right. So when we are working with $30 sort of an assumption, clearly 100 and 120 bips sort of an impact both on current account deficit as well as GDP is pretty much given. Also CPI, which is the inflation part, every 10% increase in crude is again to impact by 30-40 bips. So, and also this will in a way impact sort of a INR depreciation also. So on all of these macro parameters, purely on account of crude, definitely there is an underlying change. I mean, versus the earlier assumption. So to that extent, we have to, we have to see that how really we are going to navigate from this particular aspect. Yeah. But having said that, let me maybe preempt a bit, maybe your next question in a way that how really we are going to navigate this particular thing, and let's say what the way out. Yeah. So see, in India, things are relatively still, I would say that much better in terms of India's ability to managing all of this volatility. On inflation side, let me try to cover onto the inflation piece. Right. It looks like we have peaked out. I think April month CPI data was at around 7.8 odd percent. Month of May was around 7.1%. And it looks like now we are, I think, pretty much should come down below 7 odd percent in the coming months as such, because we have seen that food prices, which constitute of around 45% of the CPI basket, right, which has already seen some bit of a correction from peak after this beat. Just 1 second, sir.
Yeah, sure.
Yeah, sorry. So, so we have already seen food prices softening a bit from peak, so which constitute as high as 45% to your CPI basket. Plus, on top of that, if you look into all the commodity prices have softened. You look into any base metal prices, everything has come down at least 25-30% from the peak. You look into excise duty cut on petrol and diesel by the government, which is again, let's say, give you some ballpark estimate, is around every 6 rupees per liter sort of a reduction into the petrol and diesel prices do reduce your CPI basket by around 50 odd bips. And we have seen, I think, around 7-8 rupees sort of a, excise duty cut. Right. Plus, on top of that, if you look into the 50 bips rate hikes since then, let's say since the month of May data point, that will also help in overall bringing down inflation. So I think less than 7% is pretty much certainty as far as India CPI inflation goes in the coming months, and which is still higher than RBI comfortable range of around 4 to 6 odd percent, but is still not very out of the bag. Right. So to that extent, really, I mean, in India, we have seen 250 bips rate cut from the last cycle when this interest rate softening has started. We have already seen 90 bips hike in last two months as such. So there might be some more rate hikes, but it is very highly unlikely that we are going to go back to the earlier regime of, let's say, 6.5% sort of an repo rate anytime soon.
These are very two important points to touch upon. That is the interest rate cycle, because that is the most important aspect. मतलब ये equity market का सबसे important aspect है rate cut cycle, and then आपने inflation को भी बहुत अच्छे से touch upon किया. अब सर मतलब उसी क्वेश्चन को मैं थोड़ा सा एक्सटेंड कर रहा हूँ, बिकॉज ये क्वेश्चन सबका रहता है एंड आई एम स्पीकिंग ऑन बिहाफ ऑफ द एंटायर इन्वेस्टर्स ऑनेस्टली। तो ये तो अभी इंडेक्स तो यहाँ पे कहीं ना कहीं कंसोलिडेशन की फेज पे गया है। अब ये कहाँ मतलब मुझे मालूम है कि मैं फंड मैनेजर से इंडेक्स की बात पूछूं थोड़ा सा अटपटा लगेगा, लेकिन ये कंसोलिडेशन साइकिल आपको कितनी लंबी नजर आती है और कहाँ पे आपको एक वापस अपसाइड नजर आता है, ये मेरा एक बहुत प्रिसाइज क्वेश्चन रहेगा। इसको आप जो है वो 1 साल 2 साल 3 साल और 5 साल में डिवाइड भी कर सकते हैं।
Sure. So let me give you some of the, let's say, first of all, I mean, I think we continue to remain fairly constructive on the market.
जी,
And there are some underlying data points,
जी,
I mean, structural drivers, which will drive market in the longer run. Near term, I agree.
I would be more than happy if you can just touch upon those data points also.
Yeah, definitely. So that is where, I mean, I am really want to highlight to really substantiate on some of those points which will help you better really appreciate that why we have been positive. So near term, I mean, clearly things are I mean, volatile as such. So to that extent, really to precisely time it becomes something very, very challenging. But having said that, on headline basis, inflation, valuations of the market, because earnings delivery has been there. And even as things stand today, it looks like we are in a pretty decent, I mean, sort of a, I mean, spot where earnings might still chug along, maybe mid-teen sort of a number going from here as well. There might be some sort of a dispersion among sectors, depending on to the impact of crude oil prices and some of these moving parameters as such. But at an index level, it might still be a pretty healthy sort of an sort of an earnings growth. So now let me come on to the point that why structurally we have been very, very positive, let's say, onto the market, and we continue to believe that India market should continue to outperform. So there has been drivers like first, though on this particular aspect I have already touched upon, but again want to emphasize on that all this policy decision making on really balancing inflation and growth. So, so on this particular aspect, as I touch upon that, we are not going to go back to earlier, let's 6.5% sort of a repo rate in a hurry. So to that extent, cost of capital versus earlier time might still remain bit sort of benign. And that really helps in terms of overall, let's say, from the market valuations and overall investment, I mean, basically standpoint. Second, overall fiscal math, let's say when it comes to deficit and all, because a lot of things keep on coming that हम इतना crude oil import करते हैं, तो your entire fiscal math is going to go for a toss. But that is not really being the case. There might be, let's say, 20-30 bits sort of a slip up. But having said that, let me give you certain data points to really I mean, assess on this particular aspect, and all of these numbers are assuming that crude is going to remain at $120 per barrel.
Oh, great.
Yeah. So almost at $120 per barrel, we are seeing that 3.3 lakh crore of cost overrun. Because pure, and this 3.3 lakh crore is, let's say, I'm saying on India nominal GDP of, let's say, around 240 lakh, 250 lakh crore, sort of a GDP number, 3.3 lakh crore of cost overrun, which is, I would say, again, coming to the math of somewhere around 40 to 50 billion dollar, I mean, sort of a number, or in terms of percentage, maybe 1.2, 1.3% of GDP as such. And this is under three buckets. One is obviously higher fertilizer subsidy, because obviously that farmers' income and all do remain a key sort of a priority to really incentivize for them to really invest and grow things. And also food subsidy, I mean, government has sort of a increased, or let's say might have continued, which have started during COVID time, which is still sort of a continuing. And third bucket is being excise duty cuts on all this petrol, diesel and all. And we have seen, let's say, almost 1 rupees of an excise duty cut to impact government financials by around 15,000 odd crore rupees. So within 2 rounds of excise duty cut implies around 1.7, 1.8 lakh crore sort of a revenue forego. But really to compensate this 3.3 lakh crore, we are talking about additional revenue collection versus budgeted, because government has been very conservative. I mean, when it comes to their revenue collection target, and going by GST number, personal tax, corporate tax collection number, it looks like that we are going to overshoot that particular thing by almost 2 lakh crore. Plus, on top of that, we have seen windfall taxation. Government has put in just a couple of days back on refining as well as upstream oil companies. So which is also going to add almost 60,000-70,000 odd crore. Plus, on top of that, around 40,000-50,000 odd crore is through lower wheat procurement government has done for this particular year. So all of these things put together is more or less compensating, let's say, 3.3 lakh crore sort of cost overrun. So what does this imply? That this also implies that government might not want to cut down onto the budgeted capex, and which has got its fiscal multiplier impact onto the overall growth side of it. So to that extent, that is something very comforting, even at $120 oil level. Third is, let's say, overall protecting the currency side of it. Third driver being, as I mentioned in my earlier this thing, that current account deficit might increase. Let's say last year we ended at around -1.4% to around -3% of GDP. But having said that, including all foreign inflows, outflows, balance of payment might still be, let's say, at around 30-40 odd $billion negative territory versus the forex reserve we are sitting on. I think that is again something very comforting. Fourth point being, let's say, there has been a pretty healthy trend across jobs, wages, personal tax collection. I agree that there is a bit of a dichotomy here, maybe K-shape sort of a recovery post-COVID and all that, maybe relatively, let's say the income gap might be widening a bit at the margin. But having said that, from the government collection point of view and overall economy standpoint, this again, I mean, it stood pretty good. Another aspect has been balance sheets of all the corporates and all has strengthened significantly all this while. We look into debt to equity side of it, debt to EBITDA number. Most of the corporates has really delivered quite a lot during, let's say, last decade as such, or more so in last.
But are they, sorry to interrupt, but are they doing the capex?
Yeah. Again, so I'm just, so see, that is obviously capex revival. One is on to the private side and another is on to the government side. Yeah. Government side intent and all has been fairly clear from the longer term plans which they have come out, Gati Shakti and long-term infra, or let's say NIP pipeline and all that. But having said that, there has to be money also to really invest onto all of those plans. That is why I have tried to I mean, show you the sort of a math that despite of crude leading to cost overrun, it looks highly unlikely that government is going to curtail down on the capex side. Now, coming on to your question of private capex side, that again depends on to your overall demand recovery into the economy, then capacity utilization.
Is there the ray of hope that the data is reflecting private capex is started, something like that?
No, definitely. So here again also, I mean, I will try to give certain data points and certain anecdotal, I mean, sort of an evidence of that. First, I mean, again, government has taken a lot of initiatives to really, I mean,
PMI and all that.
Yeah. So certain data points on to PLI side of it, I would like to highlight that the sort of an incentives being rolled out, and this is for, let's say, fiscal year 22 to 27, 5-year sort of a window.
Right.
So they are talking about almost outlay of 2.6 lakh crore only in the form of fiscal incentives.
Amazing.
Or let's say production incentive.
Production incentive.
Yeah. So rule of thumb has been that this 2.6 lakh crore incentive, maybe ballpark with certain sort of an assumption that in the range of 5 to 7% of your production value, assuming fixed asset turn of 3 to 4x, this should translate into on an aggregate production on full-fledged basis at around 40 lakh. So which is something, I mean, almost, let's say, on current basis, we are talking about around 15% of the nominal GDP worth of production. Assuming all of this thing see the proper sort of an execution. Even if you, let's say, assume 40-50% of this to see, I mean, fructifying as such, then also we are talking about a very, very big number. And annual capex, this translates into at around 8 to 10 lakh crore sort of an capex.
My God, great.
So,
Amazing.
which means 4x asset turns, 40 lakh crore production, which means 8 to 10 lakh crore needs to be invested over a block of 5 years. So that we are talking about, let's say, almost 2 lakh crore sort of capex per annum. That is a very, very big number. So obviously this is based on the planning, but obviously everything needs to see an execution, and you have to discount a bit. So this is one side of it. And second, also, let's say, when we are talking about overall, let's say, demand improvement and all, as things stand today, obviously demand is a bit soft. Because we have been coming out of COVID, and then we have seen the second round of inflation, and all, obviously that has impacted the overall demand. But having said that, there has been any initial signs. Clearly, you look into the order book number of most of the capital goods companies.
All right.
Yeah, that has been improving at a significant pace, and the order backlog to the sales, that ratio is pretty much going up, which is again is a pretty much clear sign that there has been some sort of an improvement onto the private capex side as well, and that should continue going.
It is also reflecting according to what actually you are saying out of it, right?
Yeah,
Super.
Definitely. So clearly, I mean, I think we are of the view that there has been environment with policy support and all, capex cycle has to recover, and there has been initial signs clearly. And then, so all of these things, I mean, really, and then another aspect I would like to touch upon into the overall export side of it.
Right.
There has been market share gain in the export. You look into, we have seen all-time high export during fiscal year 22 of around $420 odd billion, which is like 7-8% CAGR from the pre-COVID time, despite of aggregate, let's say, GDP and all during a block of 3 years because of pandemic and all might not have grown substantially, but despite of that, our exports has grown at a decent pace. And another important aspect here is being that the composition of export is changing from, let's say, low-end commodity exports to more like market share gain in the value-added export into the industrial side, machineries and all that, steel and some of those side of it. And which is something very, very structural in nature, because we have got certain sort of a cost advantage as well as your entire capability, production capability. So which is really helping in. So all of these things put together really, I mean, to take a longer term call, I mean, onto the markets, I think we do remain fairly constructive.
So सर एक क्वेश्चन इसमें ना थोड़ा सा अपना छूट गया है, तो आपने जैसे like you touch upon private capex and you said that there are little surplus of it. I mean the question related to this is basically if you see the EMI to income ratio of the individuals, it has been drastically came down from 56 to 26 I believe, or 24 something like that. So my question related to this particular data is ये जो पैसा है जो surplus अभी आया है, तो ये कौन से asset में जा रहा है? Is that again going to the real estate, or is it coming to the assets like mutual funds or the stocks or the capital, you can say the financial assets? यहाँ कहाँ जा रहा है पैसा? क्योंकि ये पैसा दिख नहीं रहा है कहीं पे.
Yeah. No, that is a fair point. Really, if you look into, we have seen, I mean, the savings side of it. I mean, clearly, that is something, I mean, pretty much happening out there. On your point of really where this allocation is going, definitely we have seen uptick into the overall, I mean, real estate, I mean, sales and all that. So see, again, I will not say that, see, from, as you rightly pointed out, from the data point standpoint, affordability wise and all, I think we are sitting in a decadal best, I mean, from the EMI to income, I mean, point of view. But having said that, that again needs to be understood from the overall, I mean, from the, let's say, real estate cycle standpoint, one, obviously, I mean, if you really look into, despite of 90 bits sort of a rate hike and all, we haven't seen a major deterioration into the overall monthly sales across, let's say, because this data point is again very, very restricted to, let's say, top 8 cities as such. But having said that, I think unsold inventory, a basket of unsold inventory, that has come down, let's say, from earlier peak of 27, 28 months to now maybe 18, 20 odd months as such. So that clearly suggests that sellout has been higher than the new launches. Right. So which is also being helped by some of the dispensation being given by different state governments and all, plus on top of that all-time low sort of an interest rates. So that is pretty much continuing. So so we continue to believe that this is I think a pretty sweet I mean sort of a spot, and that should continue. But having said that, from investment standpoint, to really invest into this sector and all, not many sort of real estate companies being there. And there again, I mean, I think maybe some valuations, I mean, and all might not be that attractive as well. But yeah, we are very well representative to play this particular theme through some of the ancillary sectors, which again are linked to, let's say, real estate and all. So that is one. Second, on your point, I think funds has also gone into, as you rightly pointed out, mutual funds and all that. And again, that has also become very, very sticky in nature. I mean, you have looked into, despite of 28, 29 billion dollar sort of an FI selling market has sort of an still hold up. I mean, $2 billion plus consistent monthly inflow, despite of being, let's say, as things we are sitting at this point of a time, 1 year return might not be looking very, very attractive across, let's say, most of the funds and all. But despite of that, yeah, so despite of that, I mean, I think we have been seeing the sort of a maturity, I mean, of the retail investors, and coming through this particular route is something very, very common.
Right. So वो जो लास्ट वाला मेरा क्वेश्चन था, उसमें ना एक चीज छोड़ दी है कि जो साइकिल है, मतलब we are peak at 8,800, 18,800 nifty, then again we came down, now it's 15,200, now it is a consolidation. So how you are looking at this consolidation to the next level, and how actually the bifurcation of 1 year, 2 year, 3 year,
sure.
5 year, that is the last point actually, which has been just missing out of that particular question.
No, definitely. So see, where market stands at this point of a time, one thing is sure that maybe, let's say, first half earnings might be a bit volatile. Again here, because the peak impact of this crude shock and all that is going to get reflected now. I mean, in this current quarters or so first half earnings. And so is, let's say, overall demand and all, because peak impact of the inflation onto the consumer demand and all is also getting reflected now. But as things are settling down, inflation is also coming off and all, and assuming, let's say, rural and all things might started improving because monsoon again is being forecasted pretty good and all, and urban demand any which way has been, I think, fairly decent, healthy, and I think as thing looks like we are, from the economic activity point of view, we are pretty much out of COVID as such. So I think all of these things aggregate put together should start reflecting into a better sentiments point of view from the consumer demand, I mean, point of view. So that is one. Plus on top of that, obviously inflation also coming off and all, that should also help in overall earnings delivery as such. So, but as things, I mean, in your very first question that all of these things globally and all might still prolong and all, we are in a volatile times. To that extent, I think next maybe, let's say, 3-4 months and all might still be sort of a sideways or maybe a bit of a consolidation sort of a thing. So which is a good period to really start investing through STP way and all with proper sort of an asset allocation. And also, as valuation stand today, particularly large cap valuations at this point of a time, let's say on fiscal year 24 earning at around 16 odd times, is no longer at a premium. No longer at a premium. We are talking about versus 10-year average price to earning multiple.
How much discount? If it's not premium, how much discount?
No, so large cap are maybe at slight discount. Mid caps are still at a bit premium, I would say. Okay. So to their, let's say, 10-year history. So to that extent, I think purely from near-term standpoint, during this consolidation phase and all, I think large caps might be a better place than mid caps.
Better option to go for. Okay.
Yeah, but having said that, I think over longer run and all, we continue to remain fairly comfortable that that if earnings are going to grow, let's say higher than nominal GDP growth rate at an aggregate level and all, why should market should also not perform at least in line with the earnings growth? If
So 12% finally expectation of the EPS for next 5 years.
Sorry,
12% EPS earning growth. Fair.
I think that should be a doable number as such, because
the last 8 years was 7-8%. What actually we saw still the market is actually giving amazing returns out of it to the people, right?
Yeah. So that has been the case. But if you look into, let's say last year, there has been a multiple correction, right? While earnings have come, market might not have performed 1 year, right?
Right.
So that is the phase, I mean, which clearly comes in. But let's take longer term trend, and based on that, I think markets, particularly in large cap, they are in fact at a slight discount to their 10-year average, and which is an attractive sort of a proposition.
तो इन अदर मतलब आप भले डायरेक्टली नहीं बोलेंगे बिकॉज बीइंग अ फंड मैनेजर आपको बहुत सारे रिस्ट्रिक्शंस रहते हैं, तो क्या एक रिटेल इन्वेस्टर ने अगले 5 साल के हिसाब से एक 12% का फेयर अगर ईपीएस अर्निंग ग्रोथ उसको दिखती है तो क्या उतना ही एक्सपेक्टेशन रखना चाहिए?
Yeah, no, ideally so, because let's say from entry point standpoint, we are no longer at a premium to their, let's say, historical trading.
Right.
So, yeah, that is one. And second, I don't see any reason why multiple should correct going forward in case if there is a consistent sort of an earnings delivery with some bit of an volatility here and there. And while we are seeing all those underlying trend of low penetration and then flows, this, that, I mean, lot of and long-term structural I mean, lever driving more and more sort of an investments, earnings growth. I don't see any reason why multiple should correct until and unless obviously the things on interest rate side go haywire because of inflation, which might not be under control and all. And if that is being the scenario, then definitely, I mean, there might be further derating. But having said that, short term could be some possibility here and there, but we do remain fairly comfortable from 5-year standpoint.
So एक important चीज की like आप जो मैनेज कर रहे हैं बीइंग को-फंड मैनेजर मिराई इमर्जिंग ब्लू चिप आप मैनेज कर रहे हैं, then it is one of the fantastic product in the entire industry. आप लोगों ने बहुत मजबूत तरीके से उसके एसेट्स भी बिल्ड हुए. So एक क्या आइडिया मतलब क्या थॉट प्रोसेस रहती है आपके CIO सर की और आपकी while actually managing this Mirae Asset Emerging Mutual Fund?
Yeah, no, so I mean there are I mean 3-4 key things in mind. I will talk about investment philosophy as well as, let's say, the way to evaluate the different businesses. So we do follow pretty much GAP sort of a strategy, growth at reasonable price. So our philosophy is that ideally being an Indian investor, which is a growing market, you have to invest in a growth oriented businesses, but then up to a reasonable price. So again, our philosophy is that growth has to be a subset of value. I mean as such. So idea is to invest into growth oriented businesses up to a reasonable price. And we do follow 3-point investment criteria to really evaluate different businesses. One is on the business quality itself. So which is like growth potential of the business, the category in which it is present, whether longevity of growth or whether this business can grow higher than nominal GDP growth rate of the country or in double digit consistently with some entry barriers, and which is being measured by the ROI of the business, pre-tax ROI more than 15%, double-digit growth potential. This is a good sort of a thing to really start with as far as on to the business evaluation goes. And then obviously this has to be backed up by the competent management, which can be looked after by historical capital allocation, some of the softer aspects, governance framework, channel checks, engaging with different stakeholders through primary research and all that. And then third aspect is obviously the valuation as such, the price versus value gap. So on the valuation side, typically we do try to take a bit longer sort of a call. So in most of the cases, our research team, we are having a very in-house, very, competent sort of a research team with almost 11-member team across different sectors. They do try to research. And there we do follow mostly discounted cash flow methodology to really arrive at value of the business, and which obviously do undertake longer term assumptions and not focus too much onto the near term sort of an earnings, a quarter or 2 quarter earnings. It is more like, if we do really like business and management, then obviously value has to be calculated, because while buying business, always thought process remains that you are going to own this business perpetually.
Right.
You have to thought in that fashion and then try to arrive at a value. And if price is lower than the value, then we try to end up buying that particular business. So I think this remains a key philosophy. Another thing has been that we do try to build relatively diversified portfolio.
Okay.
Because which really do help. And so idea is not to take very high active call onto the specific sectors, because sometimes it becomes very difficult to take sectoral calls because of different cycles and all that. And also it helps in building into diversified portfolio, which can also handle, let's say, mistakes, if at all. You do end up making any of them, but at the same time you try to take a very high active stock calls, which also should reflect your conviction, right? So portfolios are fairly diversified, at the same time reflecting into conviction on in terms of very high active stock, individual stock weights. And so that is how we end up making making the portfolio. And so I think this is pretty much has been the investment philosophy, or let's say the way of managing these funds. Most of these funds, even let's say EVF, mid cap and everything, they are very very actively managed at the same time. And 90% plus of the portfolio do remain very, very core part of it, which means that you would like to own these businesses, let's say, from the longer term standpoint. Maybe some smaller portion might be tactical in nature, 5-7% of the portfolio, which maybe you might want to take a call on a short basis and all.
So great. So sir, एक another question basically कि आपका जो मतलब आप consumption तो manage कर ही रहे, consumption की थी पिछले 3-4 साल से, चूंकि it was at one point of time बहुत अच्छी लग रही थी, लेकिन ना ही रूरल कंजम्पशन ऐसा कोई बहुत हेवीली ग्रो हुआ, जबकि ऐसा लग रहा था कि डेटा बता रहा था कि बहुत सारा रूरल कंजम्पशन अपडेट होगा, अपटेक होगा, ऐसा कुछ हुआ नहीं. बट यू आर आल्सो मैनेजिंग ग्रेट कंजम्पशन स्टोरी. आपका व्यू क्या है कंजम्पशन के थीम के बारे में, और क्या अल्फा यहाँ पे जनरेट होते नजर आता है?
Yeah, no, so see, first thing, consumption is a very, I think I would say in India context, is a very evergreen thing. So see, just to give you certain data points, actually, those are very, very interesting.
Yeah.
When we talk about, let's say, you look into last 10 years, last one decade.
Yeah.
7 out of 10 years, earnings growth of the consumption bucket, and which actually we did this exercise and we are taking, let's say, top 20 companies within the consumption, top 20 listed companies, which are well representative of, let's say, FMCG, retail, consumer discretionary. So relatively a broader bucket of consumption theme B2C businesses. 7 out of 10 years, their earnings growth has outperformed the Nifty earning growth.
Wow.
So that is one. Second, none of the year has been the case that when earnings might have dipped, except for 1 year COVID year as such. But none of the year there has been earning degrowth in this bucket. So see, being a given favorable demographics and all of that, really this is a very young population, propensity to really consume more with increased per capita income, low penetration. I think these are some of the very, very structural sort of a long-term demand drivers. and which also in a way speaks about longevity of the theme. And that is how, I mean, I think no one can really do away with this particular theme while investing into the Indian market. So to that extent, really, this is something very, very evergreen theme. There will obviously be bouts of volatility here and there, which we have seen during the time of COVID. But as we were starting to recover from the COVID-led thing, COVID-led demand destructions and all, and still incomes were, I mean, as I mentioned in my earlier earlier comments, that there has been pretty much K-shaped sort of recovery. Impact of second wave and all has been far outreaching into the rural bucket and all, and their income level might not have recovered in a similar fashion as we have seen during urban urban incomes as such. So to that extent, I agree with you that growth rate haven't recovered to that extent. And again, to make things worse, this another round of inflation caused by geopolitical and all, and subsequent price hikes and all, obviously has further sort of impacted the sentiment. So as things stand today, first of all, earnings growth, I think we are sitting on a low base, because last year most of these companies have seen muted earnings, also because of relatively softer top line growth. Plus, on top of that, we have seen margins coming off because of round of inflation and more. Now at the margin, as we are seeing that inflation is settling down, on top of that, companies have taken pretty good price hikes as such. So which is also in a way getting reflected into their aggregate top line growth. And historically, we have seen all of these companies do exhibit pretty strong pricing power. As inflation soften and all, they might not tend to pass it on full benefit as such. Okay. So to that extent, I think earnings growth outlook, at least going in the second half of this year onwards, should start improving. All right. On top of that, I would say valuations might not have corrected meaningfully in this bucket. They are like, certain buckets where there has been fraud, particularly onto the discretionary side and all, there has been some bit of a correction. But again, given by the theme and long-term visibility of earnings and all, you might also not ended up getting these businesses at a dirt cheap valuation. So to that extent, I would say that at this point, maybe in overall consumption theme and all, from let's say very near-term standpoint, 6 months to 1 year, we are maybe a bit underweight as such. But having said that, again, from 3-5 year point of view and stability of earnings in this, I think this is a very excellent thing. And also to give you another aspect, that during market volatilities, in fact, you end up this acts as a pretty good downside hedge, as such. So to that extent, I think we remain fairly comfortable out here from the longer term standpoint.
Great. So sir, today it was really a great day. We have come across a few very important aspects. हम लोगों को बहुत सारी चीजें मिराई के समझ में, एक तो मिराई का इमर्जिंग ब्लू आप कैसे मैनेज करते हो वो समझ में, आपकी कंजम्पशन की थीम समझ में, आपने इवन ग्लोबल मार्केट्स के ऊपर काफी सारी बात करी, आपने इंटरेस्ट रेट साइकिल के ऊपर बात करी, आपने इन्फ्लेशन के ऊपर बात करी, एंड आई एम श्योर दैट ये एक 5-6 चीजें जो आपने अर्निंग्स की बात करी, आपने इवन जो इनकम टू इंडिविजुअल ईएमआई रेशियो की आपने बात करी, कैसे उसके ऊपर काम हो रहा है या फिर कैसे ग्लोबल साइन आपको दिख रहा है, आपने क्रूड के ऊपर बहुत सारी बात करी। आई एम श्योर ये बहुत सारी चीजें एक रिटेल इन्वेस्टर के दिमाग में रहती है, चलती हैं। आपने ये भी बताया कि 5 साल में आप ईपीएस ग्रोथ आप एक मोटा अगर सब कुछ सही रहा तो 12% का एक्सपेक्टेड रिटर्न जो है बहुत आराम से मिलने की कोई तकलीफ नहीं है, अगर एवरीथिंग ऑल द पॉइंट डेटा पॉइंट्स आर वर्किंग टुगेदर। It was really nice interaction today with you. I'm sure that this will going to certainly help out the all retail investors much better way, और ये उनको बहुत आसानी हेल्प करेगा शायद अपने इन्वेस्टमेंट्स के कॉल लेने में, क्योंकि अभी वैल्यूएशन बहुत रीजनेबली चीप है और हम लोग अभी लार्ज कैप तो प्रीमियम में बिल्कुल नहीं है, तो एटलीस्ट उस वक्त कम से कम उसमें कॉल लेने के लिए उनको बहुत सारी आसानी जाएगी। थैंक यू वेरी मच टू हैविंग ऑन शो ऑफ इंपीरियल मनी सर, द मीट योर फंड मैनेजर, और वापस एक बार ऐसे आपके साथ बात करेंगे किसी एक ही बहुत ही स्पेसिफिक टॉपिक को लेकर, और ऐसे ही बहुत सारा अच्छा इंटरेक्शन आपके साथ होगा। थैंक यू वेरी मच फॉर कमिंग ऑन शो।
Thanks a lot for this opportunity, and we are looking forward for future interaction. Yeah, thank you.
Yes,